Didn't I just say opening script? Where did it go? Hey, everybody, welcome back. I guess we're already live. We didn't realize it. Welcome back to the Creative Briefs. This is our weekly show. I'm trying to get my notes. Like I literally opened this 5 times already, but Happy New Year if you are tuning in for the first time to the first episode of Creative Briefs, which is our weekly recap of the top news and analysis from the creator economy itself. Every week, we're going to bring you a roundup of the latest news.
It does seem random at times, though.
Sometimes a little random, a little bit of our own analysis, and some deep dives on key topics whenever we have the moment to do so. But usually we don't because we have too much damn news to cover. But we do go live on Fridays at 8 a.m. So feel free to join us here. We are streaming live today on Facebook, YouTube, and Twitter, actually. Twitter Spaces and Twitter Video. And I think we're actually on LinkedIn as well. So feel free to choose whichever format is the best place or way for you to consume this content. We also do post longer form content over at creativeeconomy.com. So feel free to tune in over there for all the notes, for example, from this episode will be present over there. We are doing an AMA drop, by the way. So if you want to grab some free money, you can head over to the link that's showing on screen, and I'll share a tweet into the space once we get going. So Ken, without further ado, let's just dive right into it. I miss our music. We don't have,
Yeah, we didn't have our 80s style music going on for the first time in 2022.
I got to because we've been using StreamYard, I need to re-render that video out or something so I can play it in here. Well, we'll figure it out. We have new branding, so we need to sort some stuff out.
Wait, so with new branding, does that mean we have new? We move up a decade in terms of our music? Are we going to the 90s now?
Did you not get the swag? Because I
did not get the swag now.
No, all right. By the way, everyone, Ken is testing out his new audio setup. So if he sounds like crap, well, then that's just like it was before. No, just kidding. But now he is able to power the space. So hopefully you're able to listen. And if you have any feedback or any thoughts on how we can improve it, or if we any challenges, let us know. So Ken, let's get into the news. We got too much to cover this week.
Absolutely. All right. So we're going to talk about basically this week in short, all comes from the information because they've just been pretty killer in terms of the news.
Week, I know.
Yeah. Of course, since we're right after the New Year and the holidays, it's always been it's pretty slow in terms of news, but we found some pretty good, juicy topics to talk about. So let's do a little bit of recap in terms of what's happening in the creator economy space. So if you're not familiar, the information has this creator economy database where they track basically what's the activities of all these startups that are in the sector. And so based on their analysis, they've ascertained that as of at the end of last year, more than 140 U.S. companies raised at least $5.07 billion in funding. Now, this exceeds their predictions of $5 billion that they said earlier this year, or earlier last year rather. So kind of to put it on point, to emphasize it, that here's where it goes, where most of the spending, where the investments went in at the end of last quarter. Most of it was raised in startups that are providing software services or support for creators. That includes influencer marketing firms such as Maverick and Flyfin. Also, there's another 14 that received investments that were in basically to connect creators with fans. So, I mean, this is just more of as a data point. There's nothing really sinister, malicious, or deeply insightful from this, but it's just a nice little data point to highlight. But it kind of goes with when you see where 5.07 billion funding is going in, and you contrast it with a prediction from this investor, or Kirsten Green from Forerunner Ventures. You're kind of like, what's going on here? Basically, another article from the information later on was saying that there's more money than there are good deals. So what she's saying is that there's a lot of VCs that are pouring money into the creator economy space, but there's not enough startups that they're willing to invest in. And she's thinking that once we kind of resume some sort of normal life post-pandemic, whenever that is, there's going to be there's going to be some consolidation in the space, and this it'll also give investors a better idea of like which startup or which sector of the creator economy actually has legs and is really worth putting money into. So, Greg, in terms of just the investor side of things, like,
Yeah.
are you and looking at the spectrum, the landscape of the creator economy, do you kind of believe right now? Do you kind of agree with what this perspective that there's going to be some consolidation or some sort of a shakeup, maybe either this year or maybe next year?
Yeah, I think without a doubt, I think it's inevitable that we end up with. I think we touched on this kind of at the end of the year last year as well, Ken. But that the the current crop of things that exist in the creator economy, in the current like sort of batch of companies that got funded, all sort of hover around very similar areas, right? And so, it's how to new ways to monetize. It's maybe new ways to get to know who your audience is. It's new ways to sort of merchandise, et cetera. So, it's hard to imagine that 1,000 of those companies will all be successful, right? But I've also made the case that I think like consolidation or pure play consolidation is a little difficult in this space because of the sort of like very diverse nature of the creators themselves, right?
Mm.
So I do think like what we're going to see is um, some of these companies aren't going to make it, right? Because they sort of haven't like innovated enough or provided enough surface area to sort of create something new and lasting. I think some of these companies will converge into each other because there are a lot of complementary pieces. And one of the things I think there was, I don't know if you have the article this week, but there were some folks like in the press sort of challenging like the all-encompassing sort of nature, like companies who claim to be like everything to the creator.
Mhm.
Because like what happens if they go out of business, for example, right? And then this creator sort of like stuck in this place. But I do think like that, as is common in startups, you start in a very niche targeted way and you tend to expand over time. As that expansion starts to happen, what's going to happen is like, oh, well, we start to encroach into, company X's space or company Y space. And, when you're hanging onto the life raft, sometimes it's easier to hug each other, right? Like than it is to sort of just try to kill each other or fight for the raft, right? So I do think that this is sort of what she's alluding to in the article is just that, um, there aren't a lot of companies who've gotten sort of beyond sort of this initial early traction or sort of a concept phase into there. And if you actually, interesting is if you actually look at the dollars that were actually deployed, yes, it's $5 billion. A lot of it went to like, it's kind of diverse. Like there's a lot of like early bets on really like small things. And then a lot of fast follow-ons, right? Like, we saw how many companies like, oh, 3 months later, 6 months later. But also if you unpack that number, like 50 million of it went to like a link tree, right? Or,
Mhm.
100 million went to Maverick, right? Like, so there's some big chunks that were deployed. And I think, I can say as someone out raising, I don't think it's been, I wouldn't say it's harder per se, but I will say that the traction or movement has slowed down, right? Like um, the number of smaller companies getting funded that you see, I think, has just changed, right?
Mhm.
At least on the pure play creator economy side, and I think part of it is like waiting to see like what's going to work or what's going to succeed.
Yeah, it seems like, I mean, as I've kind of said it multiple times, like, it's being the Wild Wild West. I think it's like the first mover advantage certainly has a it comes into play here. But it's not only just first mover, but it's like, do you have traction in there? Like, so yeah, like the link tree of any space, like they're first out of the gate. Of course, they're going to get probably the most attention because they're, I guess, innovative, right? And then so the VCs will pay attention to them. But then the other ones that come in, you're like, oh well, what am I going to like? There's 50 of you, 50 now that are copying. There's like, okay, there's just too many, a dime a dozen type of these companies. So why am I putting serious investment in them? So I think that there's been other predictions. Um, I think there was a Business Insider article that I referenced in previous episodes, or that came out at the end of last year in terms of predictions. Another VC suggested that there would be consolidation in this space, right? Because it's like there's multiple of these, and like it's
Yeah.
hard to really separate yourself. I mean, it's kind of an
And real
expected
quick,
trend.
I just got some feedback from the space. Is there a way for you to increase the volume on the computer output? Because I think my voice is low apparently in the space.
Let's see. All right, keep talking.
All right. So yeah, I think it's just your level may be a little low on the computer part. Uh, that's fine either way. So here's the thing. I think it's more likely that companies die than that they consolidate. Right. So like, let's just be clear. Like most companies are probably just going to fail, which is just the math of startups, right? Like 95, 98% of startups are going to fail. So it's pretty likely that that's just going to happen. Right. Will there be some consolidation? Because someone, here's the thing. It's hard to win creators individually. So if someone has been successful in getting 100 or 1,000 creators on, maybe you converge with them, but I don't know that those are acquisitions per se. They might just end up being like companies go out of business and the team gets hired, or maybe just like a very lightweight sort of acquisition that happens. So I think it's inevitable. We will see more of it this year for sure. But let's see what happens next.
Cool. All right, moving on to let's talk more about creators. So Patreon came out with
Mm.
some news this week, also from the information. Turns out that they're kind of like a year-end update of sorts. Everyone's just giving like, hey, let's reflect on
Yeah.
what happened last year. And so they're saying that they're and since 2013, since they've started, the creators on their platform have earned $3.5 billion. Now, to put that in context, as of November 2020, that number was two billion dollars. So in the span of a year, you have about a year plus, you have about creators earned $1.5 billion more. So I mean, I think anything 1.5 billion dollars more is always going to be a big, that's a big number, right? So so I think that's
It's also
pretty fascinating.
substantial, like growth, right? It's like a
Right.
50% growth from the year before or the period before.
Yeah, and so yeah, that's right. So here we go. They indicate in the 13 months ended in December, creators on Patreon earned 1.5 billion, 50% higher than 1 billion earned between November 2020 and November 2019. So in that within that year, there's more, that uptick is, there's an uptick in terms of those earnings. So, if based on this trend, theoretically, you could see, say by the end of this year, that number could wind up being, another 2 billion more, right? So, could it be $4 or $5 billion that in lifetime earnings. So, but in perspective, it took 6 years for that number to hit $1 billion in earnings. So, um, that put that
Yeah,
in.
the Patreon story is almost like in some ways like depressing if you think about it. It's like a 13 years to get to this point. And so I think it's almost like stop talking about the 13 years, just talk about the last 2 or 3, right? Um, Ken, real quick, let's try this. Since we have no other guests in here, they're saying my audio is still low in the space. I can
Mhm.
unmute. If you turn down the computer audio, basically you won't pass my voice through, but I can go direct. How's that in the space? Is that better for everyone?
Let me just
If you can give us a little hand raise, that'd be great. But I think, well, now I'm at least speaking directly into the space and into here, I believe. So,
yeah, I can just hear it on my side, but it's coming through my phone.
oh, just plug some headphones into it. Thank you.
Hold on, technical difficulties. Oh, I can't because it's plugged into the.
Oh,
Oh,
weird.
ain't technology great?
Yeah. All right. Well, I'll mute. We'll go back to how it was. Um, all right. In any event, the so yeah, I think like what's going on with Patreon is still like somewhat proof of like where we're moving, right? Which is that fans are the direct to fan sort of model does have some opportunity to it and does present sort of an increasingly viable path for creators, um, as a way to work with their fan base. But I'm not sure what that's going to ultimately mean. Um, like if this model flattens out or if it continues to grow.
Mhm. Yeah, I think the where you had talked about Patreon's growth. I think here's some interesting insights from them. There's obviously they plan on expanding their platform in the future. They're going to accelerate that, and one thing obviously they're looking to focus, they're looking to maybe develop something around Web3, blockchain, those type of things. That's, I mean, that's not exactly news. I think there's been reports earlier on, and we may have covered it in previous episodes, where um, Patreon is looking into the Web3 space. So I think that's kind of notable that there's certainly uptick in that regards. But to the point where, I mean, I think what you're talking about, Greg, is notable. I think what Patreon has is like $3.5 billion in earnings is noteworthy because it's not on somebody else's platform, right? It's not on a YouTube, it's not on a Facebook, it's not on a Twitter, it's not on a Instagram, Snap, TikTok, or whatever. You're owning your own community to a certain degree from a Web 2.5 stance, and therefore you can I don't know, you can own you have a little bit more of a sense of ownership, I'd imagine. So I don't know, it's an interesting stat, I would say. So,
Yeah.
but
I think it's, I think the other thing that's interesting is just that we've been, when Patreon, in the first 10 years or so, there wasn't any competition, right? And I think like when a creator is like a Patreon, the right path for you as a creator is probably an open question for a lot of people, right? Some people may prefer to invest their time in courses or training, right, or something else like that. Or other people just have the right kind of audience where they might get away with like merch or something like that, right, or products that they can sell. So I think the Patreon relationship is more in that 1,000 true fans sort of arena. I think like where someone who just believes your stuff needs to exist in the world, right, and they're willing to sort of support it. But I think as the dynamic changes, that was the early use case, I guess, of Patreon, right? Like as these member benefits and tiers start to like have to grow or expand, that's going to become really, I think some of the friction as well for Patreon, right? Like in how do they facilitate people delivering more of that value in their platform, which, to date, I think has been a fairly, sort of bare bones experience.
mhm. Cool. Well, let's go into, I guess, the big news of this week. Um, NFT, OpenSea, right? So OpenSea has, Greg, you are well, we talked about this many times. You're fanatical about NFTs. I'm still just trying to figure out what the hell, like how to actually do it. But I'm aware of them. So OpenSea
Give me a credit
announced.
card. I'll get you all set up.
Sure. It is. Here's my number. You ready to jot down? It is
You can
five
just
five
put it
five.
in a banner across the screen. Everyone can
Oh yeah.
grab
Why
some.
don't we want to do that? Five
Help
five
you.
five.
They
No,
can
you are
all
not
help.
getting it.
Everyone can help.
So OpenSea raised 13. I'm sorry. Wow, it almost seems like it, but OpenSea raised $300 million in a Series C funding that values them now at $13.3 billion.
Mhm.
So like that's absolutely phenomenal because let's put it this way, right? So they were last valued at 1.5 billion in just 6 months ago. Six
This
months
is the
ago.
kind of thing we were talking about, right? Like the rates of acceleration in fundraisers is insane.
Yeah. So, $2.4 billion in transaction volumes, just in the past 30 days alone. And so like they're growing at a phenomenal rate here. So
Mhm.
this is, and like they're talking about their transaction volume increased over 600x. So there's some pretty good, it's a phenomenal like, but here's the thing, like, how does this stack up when you look at, in 2022, they're going to be facing some serious competition, right? You talk about with like Twitter potentially doing an NFT, something NFT related. You talk about with Coinbase doing an NFT marketplace, which they're doing a wait list. So it's like, how does that all factor in? And I don't know, like Greg, what are you thinking in terms of like OpenSea? I'm just like, I
Yeah.
think I kind of feels like this is like the Uber of the NFT space because Uber just raised like billions and billions of dollars every month. So like, how does this all shake up?
It's interesting because there's a number of factors I think going on here, like sort of simultaneously. Ken will be right back, everyone. But to on one extent, I've been hearing sort of like a lot of folks sort of expecting sort of a bear market when it comes to NFTs over the course of the next year. Part of that, I think, is because they expect more proliferation sort of on other layers and other currencies, Solana growing up, for example. So I think there's some interesting challenges in this regard. I think one of the big problems I think that OpenSea, not problems, but I guess like the market evolving and growing as well, though, is that we're going to end up in a situation where I don't know if everyone's getting my audio twice there, but we're going to end up in a situation where OpenSea is going to see a lot of competition pretty soon, right? Coinbase is expected to launch their new NFT marketplace at some point, probably this quarter, I'm sure. We know that the larger companies, we've got like Recur, we've got Vivi, we've got all these other sort of platforms coming along that are building and launching and creating new opportunities for purchasing and selling NFTs. And then, of course, like as the other chains, protocols, whatever we call them, I'm trying to still sort out the right words here. But as those evolve, the amount of dollars and money is going to be spread across more places. I know last night Legion and Koopa were talking about this. That the sort of exuberance that we see with Ethereum based or backed investors buying and pumping up NFTs is probably not going to be like scalable for long. And as we move horizontal, there's probably a bit more rationality coming into the space. So I do think OpenSea raising makes a lot of sense. But I guess the other argument, thanks, Christina. I think the other argument that sort of exists or sort of the things that people are worried about is just like, is an OpenSea raising venture money, right? The right approach for this world, because and actually, if you're around on Tuesday, we'll be doing our second episode of Created Work, and we'll be talking about sort of like, should you go the venture route or should you go to venture route or should you go the community or sort of Web3 route for fundraising? Should OpenSea be owned by the community, right? Should it be raising funds from its like amongst us? And what does the centralization, I guess, of more and more money, venture money in particular, into these domains mean? And by the way, if you look at, say, a Coinbase, which is also sort of funded, by venture-backed sort of institutional money. If the two biggest marketplaces, for buying and selling NFTs online, and we still have other places like Rarible, et cetera, but the two primary places for buying NFTs, if they are both backed by venture, what does that mean, right? Like, what does that level of increased centralization actually mean for the space as a whole? So I think like it's great to see. I guess from the top point of view, right? Like just that the space is evolving and widening. But I guess it does bring with it some challenges and some interesting questions about what should happen, or is this the right approach as we move forward and as we try to scale this infrastructure to be, to deliver on the promise that it has made, right? Which is that, it's for the people and sort of more egalitarian.
So, yeah. So I wonder though, like, in light of all the other, in the previous articles we talked about in terms of, is there going to be consolidation? There's a lot of money that's being put into the space. And one thing that Kirsten Green had talked about is like, she stated in that information article that there's no one winner, right? There's nobody that's kind of really been declared that a winner in a space. Like, I wonder, is that because when you look at this example of OpenSea, like there's been like millions and millions of dollars being invested into OpenSea. It kind of feels like investors have declared OpenSea the winner. Now, performance-wise, OpenSea has clearly has really outperformed itself. But is that just because of a scarcity model, right? Because there's been a scarcity of places where you can do that has, like, because where else? What other places can I use to display my NFT besides OpenSea right now?
I mean, there's lots of those, but I do think they they added a layer of centralization that helps people be successful, right?
Mhm.
And I think that that is ultimately, I think this year is what we're going to see a lot of is stepping into this evolution of like, or this bridge between Web 2 and Web 3, right? And so it's great the number of people that are here already, but how do we onboard another, 100 million, right? People into this domain, and I think that that's the real challenge here, right? And I think like OpenSea is pointing the way to some of the things that are helpful. Now, whether or not like we want to continue with like sort of a pure institutional money sort of back like ecosystem, I don't know if those parts have to go together per se, but I think like the Web3 side of the house is wise to adjust themselves to see that these some of these scalable solutions are valuable, right?
Yeah.
And focus on sort of more of that onboarding process.
Well, there's
Um,
certainly a lot of uptick in terms of like interest in terms of these type of spaces because while we're like, well, I guess at least for me, I'm agog about the fact that OpenSea has a $13.3 billion valuation. Like it's as it's cited in this in TechCrunch article, Dapper Labs, very similar, I believe, is very similar type of as an OpenSea competitor of sorts. Raised it has a $7.6 billion valuation last year.
mhm.
So there's, I think in terms of just the marketplaces, those valuations are just, going gangbusters. You know, and I just could those things be going, wildly out of control? Are they in line with expectations? I don't know. It's like I think like just the fundraising aspect of things just is very fascinating in terms of like, wait, how are you valued that high? And I can see it, high valuation, sure. But I mean, it's not like it's a WeWork where it's like, hey, are you really sure you're valued at like, whatever $40 billion or whatever it is? Like that doesn't make sense. But like on an open sea, I can see
I
it.
mean,
But
relatively speaking, for what it is or what it represents, this is a fundamental exchange, and so this behavior is critical, right? Like to the
yeah,
success, I think of things that we go forward, and it's non-trivial money that they're moving, right? So
yeah, and it kind of brings up to the point is like you have all this money in the bank, right? And you have this high valuation. It's like how are you bracing yourself to deal with more competitors like Coinbase could potentially be a serious competitor. Like this could be like an Uber Lyft type of battle right here, right? Where
mm,
like Coinbase versus OpenSea versus Coinbase all raising like a huge amounts of money. Oh, obviously Coinbase is like public. But if they get into when they get into the NFT marketplace, that could be a serious competitor to OpenSea. So, is how does OpenSea wind up continue to innovate to stand out and retain its dominance in the space? So, here's a scoop from Axios. As January 4th, they're saying that OpenSea is in talks to buy Dharma Labs. Now, Dharma Labs is a digital wallet for cryptocurrencies.
mhm.
Um, Nothing in terms of like, so apparently this is going to be in an all stock deal valued at between 110 and 130 million dollars. So
Well, this
I
gives
think,
them parity, right? Coinbase has
yeah.
a wallet already. Coinbase has a exchange, right?
Mhm.
So, and this is what we were saying before, even with the creator economy, right? Like you may start in a place, but most companies evolve over time to be more encompassing and owning more of the surface area that their customers are touching.
Yeah. Well, it's also, I mean, they're both coming in at different ends, right? They're on one side, OpenSea's big bread and butter. Their foundation is the NFT marketplace, right? But they're kind of weak. Let's call it weak in terms of the cryptocurrency wallet. But on the other hand, you have Coinbase, which is on the other side, the strong on the cryptocurrency, but then they're weak on the NFT marketplace. So this could, I think you're right. It brings that parity into there. Um, who know? I think
Same thing with crypto.com, right?
yeah,
Crypto.com started as a DEX, launched their NFT program, like, but also just bought like the branding on the Staples Center, right? Or
yeah.
well, now the crypto.com center, right? Um,
It'll always be
so
Staples
they're
Center.
stepping up, and crypto.com is a lot more of a sort of like Web3 native sort of organization, right?
Right.
Like than the others.
Yeah. So speaking of NFTs, like Greg, what kind of TV do you have?
I have a Samsung TV.
You have a Samsung TV. Okay.
I have
This might
actually, I
be
think I have like 3 Samsung TVs.
okay. This would be great. Have you ever wondered? Like, I
No,
know, like, no,
this
you've
seems
never
like a completely idiotic idea to me.
really, because as somebody who's a NFT obsessed, and you browse for a lot of NFTs because you've changed your Twitter profile like so many times, and I'm like I feel like I know like when I see you're on a Twitter space, I'm like, is that you? I can't really tell. It's like I can't remember your
I
avatar
have no
anymore.
desire to have my NFTs on my TV. I do want them to represent me well better online when I'm joining in different conversations.
For those that are not aware, at CES at the Consumer Electronics Show this week, Samsung said that they're launching a quote groundbreaking end quote new TV feature. They're going to be including a browser that will allow you to search and discover and maybe even buy NFTs right from the comfort of your own couch.
It's just
So
dumb. I just don't
yeah,
get this at all.
yeah. So I mean, look, I think here's where I think the browsing aspect comes into play because I think you look at the. I mean, one, it's the largest screen in your home, right? Just follow me on this logic because it's tenuous at best, but it kind of works for just how maybe regular people
So
might think about
here's
it.
I think where it makes the most sense. Samsung does have a TV called the Frame TV, right? Which is
Right,
designed to look like a
picture
piece of
frame.
art, like
Yeah,
blend in, right? Not look
yeah.
like a TV. To the extent that, all right, I even though like I don't think this is a good idea, I can see where you're going with it, right? Like, so for example, music NFTs. Now you could be using your TV to play them, right? Like your music NFTs. To the extent that photography NFTs and one of one NFTs become more prominent, I think it makes sense, right? Like that you may have something like as a screensaver on, like that's just going through them. But these things haven't, I don't know, it's a stretch, right? Like people have had like the digital picture frames for their own family photos and stuff, and that never really took off as like this prominent sort of use case of like anything else, right?
Yeah.
And aside from a bunch of like pop-up NFT galleries who might be able to leverage this in a meaningful way, this just seems like a bunch of like parrying on nonsense to me.
Oh, well, certainly. Like, I don't think that Samsung will bet the farm on
No one's buying
on
a
this.
TV because it has NFT support.
What are you talking about? I just placed an order for the giant, 95-inch LED that'll go on my
I hope
wallet
you got
just for that.
3 so you can fully box yourself into your studio so that you can now create whatever virtual reality you want around you.
It's the NFT verse. Come on, what are you talking about? But like you can have, but yeah, I think you can have like almost like screensavers, right? And what you're talking about, like you can just
Yeah.
do this digital art. So if you happen to have your TV on, like, but you're not like maybe it's on, but you're not like your set top box is not powered on, so you want to have just like this power thing. Because I know for when it's idle, your TV's idle, and it'll just show
You should
different
turn
things
it
like
off
different.
if it's idle.
Well, if you just want some artistic, so like I don't have a lot of art in my house, but maybe this is kind of like this nice little thing. It kind of brings you back to back in the day when you had digital picture frames, right? And you had to insert a thumb drive into this digital frame, and it kind of showed this your photos or these images on repeat. This is kind of similar, minus the thumb drive you have to insert into your TV. So, but now you can source digital art from your favorite people. So you can have all these board ape yacht clubs. You can have the crypto corgis. You can have whatever, like all these fun little things going on there. But aside from that, I agree. It has no legs. Like this has nothing. Like for those that are watching, those that are listening, would this be a thing that you would use? And I'm not sure. Did I just? Oh no, I'm still there. There's my anyways. But would you, if you're on my Twitter space, give me 100 if you buy a Samsung, if you use this NFT browser on Samsung. If not, give me a laugh emoji or something. Like tell me whether you would actually use this because but you're right, Greg. I wouldn't go. This would not be a differentiator for me to say, hey, do I want to buy a Samsung TV or I want to buy a Sony TV? well, they're about basically the same, but damn it, Samsung TV allows me to browse NFTs. That's what I want to. That's the TV I want to buy. I don't think that's going to be a big thing for me. And I think it's just shenanigans. I'm just calling it shenanigans. But
Yeah, I don't. This just seems like a really dumb idea.
yeah. Shall we
By the way,
move on?
Samsung did just come out with a new higher quality LED, which is apparently amazing. So that's what I
Well,
would be
that's
focusing
true.
on.
But the fact that you're like, oh my god, this is amazing. But when you think about it, you're not like, oh, well, in addition, it's a bonus. It
Yeah.
comes with NFT support. Yes, that's not gonna
Yeah.
be like I'm willing to pay the extra
Now,
$10
here's the
or
thing.
$600.
If there's other utility values, which we're still exploring as we move forward, I think there will be interesting use cases. But like, are you going to really like lock a channel or something? Like no one has their own programming. Now, here's what's interesting. Where it would be cool is if, for example, it could natively stream like a YouTube channel or other things like that, and then you could use these NFTs as potentially like some utility or a way to unlock a quote unquote virtual channel.
Mhm.
There could be interesting use cases, but right now we're definitely not anywhere near where we need to be.
Yeah. This is clearly an MVP. It's
Yeah.
not something. It's a nice starting point, but I think this is just more that Samsung's like, hey, everyone's talking about blockchain and Web3. Let's kind of get into the space, and then let's see and then maybe next year, let's see where we can go with this, right? So, like, I certainly hope this is not like Samsung's whole strategy. Like, oh my god, done NFTs, we did it. We are the first on televisions. We're done. Let's move on. I think this is hopefully is just a starting point for Samsung because clearly to what you're talking about, Greg, this needs to be, they need to expand on this more. Maybe like what you're saying, maybe it's like unlock specific experiences, right? Like maybe it pairs, maybe you can authenticate with like an OpenSea or a Coinbase or whatever in some way, shape or form. And then it unlocks a bunch of different, a whole Samsung experience, like, oh, movies or whatever, right? It's like, maybe it's a Samsung bundle where like, oh, okay, you have this digital art from Spider-Man, right? From Marvel. And you click on it, it opens up, unlocks exclusive content from like maybe back behind the scenes videos or the album from Spotify or whatever, right? A whole bunch of other things that you could possibly, I don't know, right? Sky's the limit, but hopefully Samsung doesn't screw it up. So, all right, enough about talking about TVs. Let's talk about audio. So, we had talked fun thing, right? I mean, we had talked. We knew that sorry, wow, it's not Samsung. LinkedIn is working on a Clubhouse competitor, Clubhouse rival, and that happened in March. That was first announced, I think it was in March of last year. No real peep about it throughout the rest of 2021. On Wednesday, we had Karen and Andre on our show from LinkedIn, who are responsible for LinkedIn's creator strategy. I asked them pointedly, like, "Hey, what's going on?" They kind of like smiled, and I'm like, "Okay, no news." And then the next day, LinkedIn announces, "Hey, we're launching our Clubhouse-style audio service this month in beta." It is all part of a events platform that LinkedIn is doing, that's rolling out. So with the first phase feature being an audio only service, so it's Clubhouse, Twitter Spaces type of rival, and a video version will be coming later this spring. Um, I think based on what Karen and Andre had told us about in terms of like helping professional creators, tell their narrative, tell their story. This is a good thing. This TechCrunch article also includes different screenshots as well, but fun point from the product manager Jake Poses told TechCrunch, quote, "We want to make it easier to host virtual roundtables, fireside chats, and more. Some may want the event to be more formal or less formal. Some may want to communicate with their audience to open up to the floor. We're giving professionals interactivity and support." So there's going to be a bunch of things that you can do on here. But Greg, like, I want to get your initial thoughts. Like, is this something that you would use?
I- you know what? I would say I can see the appeal of this for sure, right? Like I
Mhm.
think LinkedIn, and as we were, from our interview on Wednesday with them, they're sort of focusing in on this sort of idea of like the story of work, or what
Mhm.
was the term he used? Do you remember?
Oh, the world of work.
World of work, right?
Yep.
And uh, I think like I think that only gets you so far, right?
Mhm.
Like just sort of as a frame, a reference. I just don't think that seems like career development. I think like what ends up happening is like there's topics and there's other things that are probably that bubble out of that. And I think that's they're ultimately going to expand that circle to some degree. LinkedIn is a great place, like relatively speaking, for being super connected to sort of the right kind of people, if that's the right kind of the person that you're surfacing, right? It's not that everyone's on LinkedIn, right? Like who's not on LinkedIn, right? But maybe like younger generations aren't doing LinkedIn as much. But I also think like most people don't go to LinkedIn for this thing. And I think the fundamental problem that LinkedIn has sort of suffered from historically with this stuff is just like people feel like either betrayed by the transition, right? Like they feel
Mhm.
like I wanted this one safe space that wasn't like all the other stuff that I have everywhere else, right? But also, I think like at the same time is that they haven't done a good job of reimagining LinkedIn itself
Mm.
in as to be used like this, right? Like you think about a YouTube like experience, totally different than like when you go to LinkedIn, right? Um, and it's also like I guess like almost like how Facebook has sort of this challenge, right? Like for you to be a media centric place where people produce and create media, it shouldn't be buried in a tab, or at least I should be able to readily get to that type of content, right?
Mhm.
And be able to lean back and experience that stuff as opposed to like having to lean into to experiences. So I think like I would say probably those are the two challenges I still see sort of falling out here. And also like right now, the competition is still going to be like, oh great, if I'm going to produce professional content, shouldn't I do that on YouTube? Right? Like, doesn't YouTube pay me to do it? Don't I have like more upside, more distribution? Right. And again, the distribution part is, I guess, related to sort of like the UI challenges and sort of the whatever hesitancy may exist from the consumer side. But most of us don't spend the bulk of our time in LinkedIn, right?
Right.
Like versus like say, go look at your phone stats. How much time do you spend on YouTube or how much time do you spend on Twitter? Right. Like so I think like they have to get over that hump ultimately to like really get this to be successful. But if they can, everyone in there likely has a bunch of great things to offer to the world.
Yeah. Well, I think also the thing you have to consider is that the audience on LinkedIn is a little bit more targeted, a little bit more specific in terms of like more on the professional side of things, right? The more, let's call it more, I guess, a more white collar s type of thing, but versus more business focused as opposed to consumer focused, right? On one hand, like let's just talk about the audio only version because the video version is coming later this year. So, but right now, what we see here, and those that are watching on the show can see like this mock up that LinkedIn has provided the media. I mean, it looks very similar to what you get on Twitter Spaces. With like, oh, tap and it's like the little messaging, and there you go. You have your speakers and you have the people that are listening. You can add emojis, responses, and the like. Great. But I think the subject that they might expect on here, and it's kind of like what you expect the experience on like on Quora versus like asking a question on Yahoo Answers, right? On Quora, there's a little bit more policing, like people their self moderation and policing in
Yeah.
terms of like their there's a specific thing. This is not like a Facebook where you just dump your whole life story on there. This is specific to because this is your resume. This is where you're networking with people. Um, I get what you're saying, Greg. I don't disagree with it. I think that some subtleties between what LinkedIn is doing and versus going onto YouTube and everything like that. I kind of want to dive a little bit deeper in terms of what they're doing with this events hub, though. That they are hoping LinkedIn wants this to be like an end-to-end type of platform for them. So, and I'm trying to figure out where that uh, version what that language is here. Basically, they're just giving creators this option to kind of just do whatever they want, like without having to worry about the infrastructure or third-party integrations or anything like that. So let me see. Okay, so they'll be hosting as for those that are hosting events. The platform will initially be targeting individuals who are already using LinkedIn to connect with wider audiences, so creators that are on their platform. So I would imagine probably those that are participating in LinkedIn's Creator Accelerator program will have access to this from the very get-go. Um, and then, so yeah, here we go. When it launches later this month, the new events platform will include tools to run interactive content end to end with no need to use any other third party software. Hosts will be able to record and run the event straight from LinkedIn and feature tools for online attendees to host and hosts to speak to each other in live conversations and moderate discussions. So basically, a standard events platform, right? And
Mhm.
I think with LinkedIn, like a lot of their events are very much um, business focused. You have LinkedIn Learning. You people that are hosting webinars on LinkedIn. Like that's kind of like this is kind of that audience for that will probably use these type of things. You could expect like professional conferences to use this. But I think if
I
we're just
so I have
there's
like
going to be an audience for
very
this. I can
serious I have very serious doubts that this is a hop-in killer, right?
Yeah.
um, or something more robust. Not because they couldn't do it, just because this is a hard problem to work through.
Mhm.
Like Hopin is a massive business because they did a good job of sort of making this and facilitating this.
Yep.
um, LinkedIn, I can say, like, as a developer who's had to try to code against it, has not been a friendly place to sort of integrate against, and
Mhm.
that may be to their detriment, right? Like,
Yeah.
right? Like if you build everything internally, you probably build a crappy version of everything internally, right? Like because like especially with live streaming and things like this, there is a well-established industry in that arena, like of people who know what to do, best practices, et cetera. Like so, how well or readily like LinkedIn's live streaming tool has been the crappiest to work with relative to like all the live streaming tools we work with, even from our own point of view, right? Like we couldn't edit the event details, like a whole bunch of things were like
Yeah.
broken, right? Like not because like and I enjoy that we stream to LinkedIn, by the way, right?
Yeah.
But it was like very, very difficult and challenging to work with compared to say like how easy it is to work with like Twitch or YouTube, right?
Yeah.
Um
And
so
you're right. That could be very much that is probably their Achilles heel, right? It is
yeah,
that
so
is that
I just think like,
integration.
you remember when TikTok came out with their tool
Mhm.
and then but they made their tool, but it's not open, it doesn't work with any of the existing tools, and it's basically a crappy bastardized version of OBS, right? That's not better, right? Like we're like when Web3 is like at the edge of the precipice here, right? And then we're building more insular solutions that don't make it easy for people to be successful, that don't make it easy for people to monetize, that don't make it easy for others to participate. I don't know how that's making the world better, or I certainly don't know how that's like preparing us for the future.
Yeah. No, I think you're right. I think a lot of these companies and you see these with big companies and LinkedIn and TikTok are not not the one the main like the only people that have done this. Like you look at Facebook, the same thing. They will roll out like look how many times Facebook rolled out all these like different apps just trying to kill Snap.
Yeah.
First, they never were successful in killing Snap. Snap is growing more phenomenally well now, but like how many different like versions of like you have Facebook Reels or whatever the hell it was, like all these different apps that kind of came and went. Google has like 40 billion text messaging apps or messaging apps that ultimately failed to try and take over, beat up on Facebook Messenger and iMessage, and they're still struggling on that front. So a lot of these, when you get to a certain point, you're going to have to struggle with that in terms of that innovation. And it's like what you're saying, like they're putting this stuff out and it's becoming very sluggish, right? It's like, okay, you're just doing the bare minimum, kind of like what you think works, but like it's like that meme. It's like what you think it is, but in reality, it's much worse. That's kind of what you see in this space. I think to LinkedIn's sort of some of the advantageous to LinkedIn that works for LinkedIn is that this live audio space is still somewhat nascent. I mean, you look at, I mean, yeah, Twitter Spaces is doing, it's blown up. It's gaining a lot of people. It's part of the main ecosystem. They have a lot of support around it internally, but it is buggy. It's very much buggy still, right?
Yeah.
Clubhouse was this darling in the early pandemic 2021 2020 whatever. It's kind of struggled to as others come into this place. Spotify's green room, nah. Not like that's not doing
Well,
well.
I guess the better question here, Ken. The backdrop here is there's a lot of talk about just is social audio even a thing, right?
That's
Like,
true. That's true. Yeah.
um,
Yeah.
right, and so is this
The age old question.
is this late to the market, or is it like burrowing into a market that doesn't exist anymore, or that maybe is going to prove to be unviable,
Yeah.
or certainly as a standalone thing.
Yeah.
Um, right. So I do think we're seeing some interesting challenges now. Um, I think as this ecosystem is sort of fleshing itself out. Look, we still are locked in and quarantined up, right? And so, like, if there's a decline in this now, when people are still stuck home, um, that's probably not a good signal for what's going to happen when everyone goes back outside. Um, right?
I'm waiting. I'm waiting for all the people like, okay, I'm just done with Zoom. Like, just no, like, just pick up the phone and call me. That's the way to go.
I don't think
But
live content goes away by any stretch, right? But I think I think there's going to be challenges here, right? Like
yeah,
especially with the audio only stuff. I like the audio stuff because of the passiveness of it. You can consume it in the background, but you can also just listen to video in the background as well if you don't want to watch it. But I think I don't know. One of the other articles I think the information had was just about sort of like this collapse of sort of social audio, or someone had it, insider information, right?
yeah,
Um, but yeah, I don't know. Look, I hope it works out for them. I think there's a ton of great professional content to get out there. If Amazon has a shot at growing up live commerce stuff, then I think LinkedIn has a shot of growing a massive network of great business content. Um, they do have to make some meaningful changes, I think, though, in sort of how they position and roll out and integrate with the rest of the ecosystem if they want to
yeah.
be successful.
Look, I think with the final thing I'll say about LinkedIn, and I'm calling it audio events because I don't know whatever they're calling it.
Mhm.
I think the approach, the people that like, I think for one reason why I would use it versus Twitter Spaces or Clubhouse is because when I go on to LinkedIn, I know the frame of mind that my listeners will be in. They'll be on more on the business side or on the in that industry, as opposed to on Twitter Spaces. I have way more followers on Twitter, and you can have that serendipitous moment where you see people and you talk to people. Like yesterday, I had a Twitter Spaces conversation, and I'm like, oh my god, there's so many different people. Talked to this guy that was that had worked on Star Trek, like books and composed music for some of the Star Trek stuff. Like we were just bantering on, and oh my god, like he has amazing stories. I mean, but then it's just like, where do you want, what kind of audience do you want? And I think if you want something a little bit more business or professional or workplace centric, like that's probably where LinkedIn
Yeah.
is for you. But you know, anyways, but since we're talking about social audio, I mean, Greg, you're gonna enjoy this one. But let's pull this back up here. Clubhouse, woo! Clubhouse is in the news. It's
Yeah.
available on the web ish,
It
sort of,
is. I think I saw
sort,
Jay
sort, sort,
mention that
sort
yesterday.
of, sort of. Hold on, hold on. This is sort of, not quite. Let's see. How do we explain this? Okay, so I'm just gonna jot down my notes because this is like a short thing. Like Clubhouse is testing a sharing option that you can promote. So I can take the room that I'm in and I can share it with you off the platform. So if you click on the link on in your browser, right? And if you don't have an account, you can listen to it. Even if you have a Clubhouse account, you can still listen to the room on the browser. However, you're only able to listen, and only some of the rooms will be available for replay. So it's
Wait,
still
so
not fully
everyone
there.
listening is still a user. There's not a public listening
No,
version.
no, no. So say we have this as we take this room. Say we're on Clubhouse now, right? You take the link, the URL, you share it with people on Twitter, on Twitter account, on Facebook or whatever, right?
Mhm.
They click on it on their browser or whatever, desktop browser on the web. They click on it. They can listen to it regardless of whether they have an account or not. Regardless of whether they have a Clubhouse account or not, right?
Oh,
So
okay.
yeah.
But wasn't that the
So
whole thing? They want to know who's in the room and stuff like that in the
something like, but
past.
you're only able to listen. You can't participate
But
right
technically,
now.
listening is still like you're in the room, no?
That's true. Yeah. So I wonder if like at the very bottom they have a bunch of all these just random avatars, right? Like just like it's like an NFT type of thing where you're like, okay, just random people. and you're like, oh, I don't know, right?
I like the but now it's too late part of the article.
And speaking of too late, right? TikTok, so this is a nice little tit for tat type of thing, right? We're calling this the copycat segment. So TikTok is testing a new version to where you can retweet.
Eileen, by the way, Eileen says you do not need an account to listen.
Yes. You do not need an account to listen. Yeah. So on TikTok, there's this nice little repost feature that they're testing. Everyone's testing these things, and so you can share it. But this repost feature is not going to be available on everywhere on TikTok. It's just going to be available on your For You on your For You feed. It won't be available on the Discover page or anything like that. Now, what TikTok's worried about is people gamifying this thing where you're like, oh, let me game it, more people retweet. It's like a collaboration where influential people and repost each other and to garner more views. No, that's not going to be the case. What's going to happen is TikTok is what they're saying is to avoid that. You need to be, in order for you to repost somebody, they need to be a mutual follow of yours. So, for example, me reposting, some influential TikToker won't necessarily work because that TikToker needs to be following me as well. So there's a little bit of protection, so to speak, to avoid overhyping some popular or some popular TikTok users. So, but you know what? Twitter's like, hold my beer. We're launching video reactions on iOS. Well, they're testing an option on iOS to do video reactions. So they're like, TikTok, you're going to copy us. We're going to copy you. And so on iOS, because right now you can do a retweet, you can do a quote tweet. Now you'll be able to do a video tweet, which according to a Twitter tweet, they're calling it a Twitter take or a tweet take as opposed to a hot take. So you find a tweet. If you want to, you can do a quote tweet with reaction. It'll open up your camera and you post a video of it.
I like this actually. I think this is pretty cool.
Yeah, well, I mean, it's interesting, but it's like, how do I don't know. It's like from the discovery aspect. It's kind of a little bit suspect here.
Well, I like it because
it's like, how long is that video? I don't know.
But sometimes the right response is to, be able to use your own voice and add empathy and add, emotion to a response as opposed to like, sending out some words quickly or flippantly, or that are easy to be like misinterpreted. Right. And so I do think like there's so much conversation happening on Twitter that it's kind of nice to be able to do this. I think, unfortunately, adding video modalities like into a text-based stream kind of sucks as well, though. So I don't know how well like the consumption part will go.
Yeah. I wonder at which point in the near future are we going to see Twitter basically pull an Instagram and say, you know what, we're no longer this text-based app or the internet,
they tried it with tweets, right? And they gave up.
Yeah. Well, I mean, but they're doing more media stuff as well. I mean, it's obviously with live video and Twitter Spaces and now with this TikTok type of video reaction. It's like how Instagram is like, Kevin Masseri is like, we're no longer a photo sharing app. We are a blah, blah, blah. It's like, this is kind of where it seems like they're pivoting. Well, I don't want to say pivoting. They're expanding well beyond just the traditional 280 characters. I'm not saying that's a bad thing. I'm just saying that's where the perspective of what's going on with Twitter. So look, if you're on iOS and you have access to this, let us know. I'm sure that these video reactions will be visible to the general public. It's just those that will be able to create it will be limited to a specific number of people on iOS. So, hey, if you do have this access to this, why don't you post a video reaction to a tweet of ours on @Created Economy? Let us know and show it off, and that'd be awesome. So, but that is pretty much it in a nutshell for the news. Greg, what do you think about all of this? Bonkers? Not bonkers? Great way to start the year?
The same thing we were talking about in the beginning of the segment about what's happening with startups is happening with big platforms too, right? So nothing new here. I will say, like, this is it's only been a week in this year, and it feels like a year has passed. This year is just going to probably be insane. So I think everyone should be ready for a pretty crazy journey. At least I know, like from our side with the show, even we're straddling now creator economy and sort of the Web3 economy, and that definitely has added a lot of overhead in our minds about where to look, what to talk about, etc. So I don't know. I think it'll be interesting to see where we end up, even in a few months from now, right? Like how some of these things play out with consolidation, etc. So it's a thread we'll keep pulling, I guess. But in case you are wondering, we do still have our 3 shows per week, by the way. So make sure you tune in. Obviously, our show on Friday mornings was the news. On Tuesday, we do our created work series where we're actually building and launching like sort of like NFTs to fund our startups. It's with some of our old regulars. Abhinav and Arnold are actually going to be are the co-hosts for that show. This Tuesday, though, is going to be a great one because we're doing VC versus Web3 for funding. We do have Antonio joining, Francine Hardaway joining. Antonio from GCR is joining. Francine Hardaway, old friend of ours, angel investor, also NFT investor, will be joining, and also a third venture capitalist that I recently met who's investing in the space. So we're going to have her, Megan, on as well. So it's going to be a great convo because I think we're going to finally get to suss out like, hey, is this viable for startups in a pretty meaningful way? And then Wednesday, who do we have Wednesday, Ken, coming up?
We have, oh my God. So we have this YouTuber, Marina.
Oh, yeah.
Mogilko, I believe it's pronounced her last name. She's has I think 3 YouTube channels, right? And but here's I guess most recent headlines, and we covered this on Creative Briefs. So remember how Slow Ventures invested, I think, $1.5 million or something like that in a YouTube creator? That's Marina.
Yes.
And we're going to be talking to her about that.
Yeah. Oh, great. Yeah, I forgot. We booked it a while ago, so that I'd forgotten. But yeah. So she's one of the first YouTubers to raise money for like institutional money for her YouTube business, which I think is going to be an amazing conversation. Yep. And so if you have questions, by all means, you should be able to head over to created.show because you can get to a way to ask us questions or leave questions behind. And we're looking forward to that. So I got to get our game back together. I haven't gotten our decks done. What happened was when we did the rebrand, I need to change all the style on all the things. And so like all these pieces have changed and I haven't had enough time.
You had one job. Well, okay, yeah. Technically
I had like one job per minute. Just to show you how far behind we are, this morning we hadn't actually scheduled this week's show that we're currently doing. So
I thought we had because I think we had done it on Zealous or anything. Anyways,
we did on Zealous. We decided to switch over to StreamYard for this week. But I think we'll be back on Zealous next week because as much as I'm comfortable being here now, I'm actually used to doing the show on Zealous. So.
Look, I like something that's easy for us to do the show, to be able to syndicate to a bunch of these things. Producing a show ain't easy. This is gangbusters. I mean, it's fun. I mean, it's like just figuring out all this mixer stuff. So, hey, at least I didn't screw up on the mixer ish. Too bad. So
yeah. All right, everyone. We are over time today anyway, but it's been a pleasure. Have a great weekend. We will be back next week with loads of great programming. So we're looking forward to seeing you then. And until then, talk to you later.
See ya.